This report was making the rounds yesterday because, there are very few bears out there, right, on Tesla. Everyone seems to be buying into Elon Musk's vision. So the biggest problem you see with this Gigafactory is what?
So I don't necessarily think we're totally down on the Gigafactory, but when you look at what the estimates will be for electric vehicle sales, they're projecting around 500,000 vehicles in the year 2020. We think that in a likely case that will be around 240,000 vehicles.
So half that.
Right,
Why?
so about half their capacity. And there are a few reasons for that. So most of the demand is coming from the Model 3. And if you look at where the Model 3 is priced at, it's around a $35,000 to $40,000 price range. And that puts it squarely in the competition of the Audi A4, Mercedes C-Class, BMW 3 Series. And those have very well understood sales patterns. So if you look at the past 10 years of sales, that's around 400,000 units per year for each vehicle. So Tesla would have to at least hit that target.
And they'd have to take market share from those companies?
Probably they would have to be disruptive to those three models.
Okay.
And so on the 2020 timeframe, we think that that's probably unlikely to happen. If you look globally at electric vehicle demand, we're talking around 440,000 vehicles in 2020. So it's certainly possible that it could be a little bit above that, but Tesla would really have to take a significant share of the entire electric vehicle market share.
But the way their run rate is right now, aren't they on track for those numbers?
So to date, they've shipped around 3 gigawatt hours, and they have to have significant scaling with the Gigafactory to really hit that. Going from 3 over 2 years to 35 is quite a jump.
Now, Elon Musk has said so himself, and he said this at the conference call in the last quarter, that it's not just about making batteries for his cars, right? There's also stationary storage as well. So they believe some of what's going to be produced there is going to power maybe businesses or homes, that sort of thing. So it's not just about reaching this target of 500,000 cars.
Right, absolutely. And they have a very strong partnership with SolarCity. They're able to use SolarCity's sales force as well as their own.
And SolarCity, by the way, pioneering this whole stationary storage concept.
Absolutely. And so we just think that the market size just won't be large enough. So if you look at a residential, utility scale, light commercial, these batteries will probably only represent around a few gigawatts, around a tenth of the capacity, projected capacity of the Gigafactory in 2020. So, maybe if you go from 15 to 18, stationary can help, but it won't bring it all the way up to 35.
What about partnering with other companies, other auto manufacturers, and being able to make batteries for them?
Absolutely, and that's something that's been discussed. But right now, Tesla has increased the energy capacity of its cells. They've sized them by about 10%, but it's still fundamentally a different format from what you see the Nissan Leaf using or the next generation Prius plug-in or the Chevy Volt. They're using a pouch format, whereas Tesla has a cylindrical format.
So it wouldn't fit then?
Yeah, it wouldn't fit, and automaker product cycles are around 5 years, so next generations have already been committed, and when you're looking on this 2020 timeframe, you're not going to see demand come from another OEM using Tesla's batteries.
Dean, what would make you change your forecast then, or change your mind on these numbers?
So I think, if you look at where Tesla has so overall market demand, price of oil could certainly influence it, but the
faster
U.S.
adoption, charging stations.
Absolutely. How China plays out, China's been talking about policy there. We're forecasting China to overtake the U.S. in 2019 due to expiring subsidies, but as soon as Tesla hits 200,000 vehicle sales, the $7,500 tax credit goes out. So that will certainly impact demand, especially for the Model 3.